Welcome to the Me the Money Show with Dan Barnes. I'm the editorial director for Markets Media Europe, and today I'm joined by Lynn Strongin Dodds, who's the editor of Best Execution magazine. Lynn, welcome to the Me the Money Show.
Thank you very much. I'm here to discuss what is in our issue. It was just happenstance that we were covering equities in this issue, and although COVID-19 was emerging as a real problem, we would never have predicted the profound impact it would have had on our lives, markets, and the financial and economic system. Dan, who I'm talking to, was the person who wrote it, and I will let him explain to you what the article was about.
Sure. Well, I mean, many things that we saw in March particularly were that trading volumes went up through the roof. We saw that volatility, of course, was massively increased around prices. There's a lot of uncertainty. Market makers stepped back from some markets in some cases. And we saw that even in the exchange-traded funds business, for example, on the London Stock Exchange, market makers weren't able to quote in the same range that they would normally quote, and they had to ask for the size of bid and offer quotes that they make to be expanded somewhat. So there's a lot of things happening in March. Clearly, what we're looking at in the article is the impact this actually had on buy-side firms and sell-side firms, particularly on their trading desks, and how they handled that. I mean, Lynn, I don't know if you had any thoughts about the piece itself, but I think for most traders, it's going to be worth looking at this to get a sense of where they were compared to the rest of the market.
Yes, and I also think it'll be important. This is so unprecedented, and you're supposed to model for Black Swan events.
Yeah.
And no one modeled for this Black Swan event. And I was actually talking to a trader who said, you know, we were always talking about pandemics, but you don't blame them, but no one actually took this as seriously as it happened. Even in January, people thought, oh, SARS, Asia, China, it's not going to come to Europe. And so I think you're right. It's going to be a real differentiator looking back on what has happened and who has actually outperformed their peers.
Absolutely.
We also highlighted a trend that was beginning to happen, but followed through during COVID, was how ESG funds were outperforming their traditional peers. This was particularly... Sorry,
I was just going to say, that's a really interesting trend.
A very interesting trend. It was very evident in March. We have showed research from Schroders that the UK in particular, with the FTSE 100 ESG Leaders Index, was down significantly, minus 27.3, but that was still higher compared to the FTSE 100 index, which was down at a greater 33.7%. And then we have separate data from Bank of America Merrill Lynch that showed that the top 20% of ESG ranked stocks outperformed the US market by over 5 percentage points during the recent sell-off in March. However, the main stumbling blocks for fund managers, which is the lack of standardization, uniform definitions, and quality of data remains. And the article looks at the difficulties of integrating ESG analysis, which has become incredibly important, into research and the international, regional, and national initiatives that are trying to develop some kind of framework. ESG data is not the only area that has problems with lack of standardization. Market participants have long been calling for the industry to join forces and develop a global language for financial instruments and transactions, but progress has been slow. Heather McKenzie explains why this has been the case. And again, the different initiatives, such as the one from the Financial Stability Board and G20 finance ministers, as well as the central bank governors, to develop the universal LEI, or legal entity identifiers, to kind of help move this trend forward. Technology is and will always be a major subject. And this issue, we look into more detail about the hype around artificial intelligence, AI, and machine learning, which, as our author Jana Pache says, are perhaps two of the most misunderstood and misused terminologies in the modern lexicon.
Absolutely.
But no doubt they have the potential to revolutionize trading and the way participants operate. At the moment, they are really just used for data management and insights. Jana kind of separates the myth from the reality and looks at future applications.
Very good.
The other article we're looking at is regulation. Again, one of the fallouts from COVID is the delay of European regulation. However, the Central Securities Depository Regulation, or CSDR, was postponed before the lockdown started, mainly because of the complex implementation process that is required. Again, market participants have long been calling for this, and now they have until February 2021 instead of this September to implement. Jill Wadsworth outlines the reasons for the reprieve and why institutions were up in arms over some of the more thornier requirements, particularly the infamous buy-in, where those selling securities may be fined if they have failed transactions.
Then on that point around CSDR, clearly the big problem with that is the mandatory buy-in. So
Yes.
sell-side firms particularly may be forced to go out and find a security that if they were unable to actually settle a trade, find that at any cost, and then they'll be liable to a fine. So potentially the cost for a failed trade could go through the roof. And as a result, some sell-side firms have said that they're not going to make markets, particularly in illiquid instruments, where these costs could potentially outweigh the fairly small margin they're making on those trades today.
Yes, I totally agree with you. I think it's going to be a real issue, and I think liquidity is going to be a real problem because sell-side firms do not want to pass this down to the end client, particularly today. That was one of the issues being discussed before COVID-19, but I think now afterwards, no one will want to do that. Everyone is very clear that they want to, do the best they can for their clients and not have any undue costs. So yes, it'll be interesting to see how, there's a lot of debate and discussion, and they want to even delay it further than February. So the jury's out as to how this is all going to pan out. And this has been going on for 4 years. So yeah. It's a long time.
Absolutely.
Yes, the only thing I would say about this issue, which has been quite interesting, is that we interviewed 3 quite well-known and leading experts. So we interviewed Vernita Exum, who's head of index equities in Europe at Vanguard Asset Management. And she emphasized the importance of business continuity plans in virus and how that has really helped them manage very difficult circumstances. She also talked about having the right technology in place to enhance performance for the end client and to ensure that you're just really client focused. I also spoke to Ralston Roberts, who is CEO of Instanet, and he offered some very interesting insights because the company has been going for over 50 years, but the strategy ironically remains the same, and that is to continue to focus on innovation and also to challenge the status quo. And that will, who knows if it'll keep them going for 50 years, but so far it's worked.
Yeah.
And my last interview was with Anna Gifaskis, who is Chief Risk and Compliance Officer at Euronext. She's really had her hands full post-financial crisis. She talked about the MiFID review. But she, interesting, said that although COVID was a challenge, she saw this as quite an opportunity. And I think on a positive note, and I'll end here, she summed it up for many people when she said, well, we have definitely learned about ourselves, our organizations, and the environment around us. We will all be different after this. Change is definitely happening, but we should seize the moment to adapt and become stronger. So I'll leave you on that note, unless you have other questions, and I hope you all keep healthy and safe.
That's been great. Thanks very much, Lynn.
Thank you very much. Bye.